It has been a minute. What's good, YouTube? We're back. Anyways, so it's been gone for a minute, but you read the title, so we're gonna do a little recap. Of course, for you guys that are curious, I'm trying to decide what we want to do with the channel. Where do we want to take it? The reality is, I can only teach you guys so much. Majority of you guys who are already learning and or have learned are in the Discord, learning even more. So trying to decide what content you guys want me to push out. Let me know what you guys want to see. As of right now, still producing shorts, whatever the case is, but long form content we're trying to take a step back from, just to figure out what we want to post. I still want to do trade recaps. As you've seen this one, this is a weekly recap, so we're gonna go in and see, because we were break even on the week. I mean, nothing much to pull up, but you know, my phone's trying to do a software update. Let's go here. Bam. Last week, our break even on the week. So, sorry, $85 loss on the week. Break even nonetheless. Let's get in. What happened throughout the week? We're gonna look at the journals. We're gonna look at the trade Zello. We're gonna look at everything. So, you guys want to stick around, feel free to stick around. Like I said, this is more so back to kind of doing it for myself, just going journal after. But for you guys, I want to see, the recaps and see what we're preparing to do for the next upcoming week. Stick around. Anyways, let's go. Bam, here. So first thing I actually want to recap is, as you can tell, this was one of our positions. One of our positions, one of our 3 positions on Friday. We did scale in a few positions. Let me just double check if this was the right position. It was right at that break of structure. Okay, there you go. So, scaled in a few positions on Friday. Some on our micro accounts, some on our macro accounts. This trade right here was on our micro account. We just wanted to take the position for fun, even though we should have actually taken the position on our macro account, and I'll explain everything why. But essentially, I was waiting for extra confluence. There was news on Friday. So let's just go in and recap this entire news week. Let's start off with that. And I'll also go in and and see how we're going to prepare for next week's news, because we have not a hefty amount of news, but we have a bit of news, I think. We have a bit of news. So, nonetheless, Monday was a bank holiday. Martin Luther King Day. Homie shut down my markets. That was a... Okay, keep my mouth shut. Anyways, Tuesday, we had Empire State Manufacturing Index. That day, we took... I'm pretty sure that day was a manual close. No, I remember. So we'll actually go look at the journal together. So that day was a manual close. I want to show you guys that trade. Here, price ended up invalidating our retracement tools before liquidating to the downside. Here, around here, we did manually exit the trade position due to it invalidating our set of retracement tools. And we'll go in and plot that out, because I want to showcase that trade position. With that trade position, we learned throughout the week to continue to allow our trade positions to play out, and regardless whether they validate and or invalidate our specific retracement tools. Right here, we did have a 5-minute fair value gap that we plotted. We ended up invalidating it before actually liquidating to the downside around 8. I did manually exit this trade. I had a beautiful, beautiful trade entry. If I go here, and note this may be a little longer video, but it really is just for me to go in and recap. So, like I said, if you guys want to watch, feel free. I love having you guys watch the videos. Anyways, for you guys that are still sticking around. Anyway, bam, we got liquidity up there. Price came down, broke structure here. Our trade entry was on that New York Open break of structure to the downside. So, NYSE Open, not New York Open. Bam, New York Stock Exchange Open. Stops were right above here. This is how the trade position looked. Our original target was here. We did have extended draw liquidity targets down lower, but for now, I'll just plot that one. Nonetheless, price action came up, ended up chopping, eventually invalidating our price action retracement before actually making the move to the downside. What did we learn from this trade? Well, we learned, and we've learned this from the past from manually exiting trades, but finally, we properly solidified it. Of course, when executing on your A plus setup, executing on your A plus playbook, you know, what and how can you continue to go in and focus on replicating your wins over and over and over again? What confluences do you have? And one confluence with this trade was definitely our SL. We had an amazing SL. Even when I exited, I had a multitude of people hit me up after the trade and say, yo, Lonnie, I don't know why you exited that trade. I was in the same trade with you. I had an amazing SL as well. Your trade entry was where my SL was, or my SL was where your trade entry was, whatever the case is. You had an amazing entry. You shouldn't have exited, and I knew I shouldn't have exited, but we did nonetheless due to it invalidating our confluences. It wasn't an emotional or profit issue. It was just simply, okay, bam, invalidated it. Okay, let's step away from the chart. Should I allow our trade to fully play out? Yes. Why? And let me explain this. Within the trade journal, if I go to trade journal, I did end up emphasizing the only way to properly understand whether or not we are learning from our trade strategy, we are executing on our trade strategies by fully letting it play out. This goes for everybody too. If you're manually exiting your trades due to whatever the case is, even if it may not be emotion, in our case, you know, ours are just, okay, cool and validated, we exit, right? But if you're manually exiting your trades, you're not allowing your trades to fully play out. What does that mean? You're not allowing to get a full understanding of your trade strategy. You're not allowing yourself to fully grasp the concepts that you go in and execute into the market with, right? So what does this tell us? Okay, well, when you have a validating stop loss above specific highs or whatever the case is, and you understand bias and you're following your overall playbook, right, what should you do? You should trust your playbook. In this case, all of our things were checked off here in pre-market conditions, market conditions, and entry criteria and exit criteria, and yet we still allowed ourselves to sit there and nonetheless manually exit the trade. So what does this tell us? Okay, this tells us when going back into the markets next week, and obviously we fixed it throughout the rest of this week, allow your trades to fully play out until TPRSL, allow your trade position, allow your trade strategy to really showcase what it shines at, right? So that was one example. Price ended up liquidating to the downside. We ended up getting our bias from, if I go here, from hourly. Hourly provided an amazing setup. Retraced for this hourly fair value gap news data release. Empire State Manufacturing rejected heavy off of it. Bam, scaled down to 15 minutes. Seen a more micro fair value gap get filled here and semi here. Before that actual pushback to the downside. So we did have a lot of really good confluences for this trade. We learned, what did we learn from this trade? To continue to hold our trade positions until TPRSL and continue to execute on our A plus playbook, right? The next trade after that was a win. We did end up going in. This was, okay, I remember this one. Bam, bam. How long have we been recording for? Only 8 minutes? Wow. This is a new record. This is the fastest we've ever been recording. Anyways, the next day, actually going into it, let's allow it to play out. Because I remember our trade entry. Bam, right here. So the next day, New York market open, price action retrace into this daily order or hourly order block. And this hourly fair value gap right up here. Bam, fair value gap. And sorry if the chart looks a little messy. But bam, and then the hourly order block right here. I think ICT traders call this the breaker block. I'm not sure, don't quote me on that. All my ICT traders I watch me, correct me if I'm wrong. But anyways, bam. Here, price action retrace into the order block before rejecting back to the downside, breaking structure. Once price action broke structure, that showcased to me, okay, we're valid, we're good to go, good to look for shorts. Did I think we would liquidate as much as we did in 2 days? No, we liquidated around 3%. It was a really heavy liquidation to the downside, but I'm not complaining. I love playing shorts on gold. Trendline breakout, nonetheless. What we were looking for originally for a retracement, we were looking for 15 minutes to retrace. Lonnie, we did retrace, yes, but I mean after the hourly close, I wanted to see a retracement. We never seen that scaling down at 5 minutes. What did we look for? Well, what did we look for? Price action retraced, fill this fair value gap. Let me plot this out. Well, really form this fair value gap. Came in, validated it before the pushback to the downside. But why did I actually execute on this? Well, looking at our micro time frames, we see price action did what? liquidity sweep break structure, bam. Price action came up, took out these 1 minute highs. Thought we're gonna see a 5 minute for about 5 minute retracement or 5 minute liquidity sweep. Never did. Anyways, scaling back to 1 minute. This is where we executed on our trade position. Again, New York market open. I mean like 6:32 a.m. This trade was taken. The last trade was taken at 6:31 a.m. So starting to build a habit of executing during New York market open if price action showcases probability. Nonetheless, when I was trading in the Discord with this one, I was telling them if price action were to break structure back to the upside right here, we would exit our trade position and wait for a more significant break of structure. This doesn't mean, okay, we're going to wait and play buys to the upside. No, I was going to wait for a little more significant break of structure just to showcase that we did have a little bit of momentum pushing us in the direction we wanted to. Right here, you can see if we go on line chart, yes, we did break structure, but it was kind of janky. I wanted something to showcase a little more momentum. If we would have closed around down here, would have been beautiful, right? Nonetheless, we didn't. My trade entry was right up here. Original SL, of course, we didn't have it fully set yet, but was around there. Price action started to chop, failed to break structure, eventually breaking structure to the downside, right? Where originally, if we would have waited a little bit longer, of course, it would have saved us a little stress of having to go through that little consolidation period. We would have simply just executed here. Bam. Beautiful sell to the downside, right? So, nonetheless, our trade entry was around here. Nice SL, above 1 minute highs, above New York market open, above, whatever retracement tools we currently had, right? Mainly that fair value gap before that break of structure to the downside. So our trade target on this one, we actually had macro 4-hour targets because this was a larger liquidation. We were targeting the middle of this 4-hour fair value gap. Price action continued pushing even lower for the day, but that was that one. Next day, we did not trade. Lonnie, why didn't you trade? Well, last week, did I post any trade recaps? I don't think I did, but last week it was a pretty brutal week. If you guys follow my Instagram, you would have seen it was around a 6.2K loss on the week. Pretty brutal week. Actually, no, I lied. It was, no, yeah, no. It was a pretty brutal week. Maybe around $8,000, $8,000 loss in the week. It's pretty brutal week. Going into it, we were looking why, because consolidation price action was chopping throughout all of last week, and we were executing on trades that really just weren't probable right here all throughout this chop. And so we ended up taking a major loss throughout that week. And so my focus on this week was really just rebuilding that trade consistency, being able to properly plot out our playbook, properly go in and, journal in the sense of, okay, how can we look to improve for the next week? Don't even think a month ahead. Just think next week. And then take it, bit by bit, step by step. And, sometimes that's really all we need. I was talking to a friend recently, and he was telling me, some stuff he was dealing with his own trading community and everything. And so when I reached out to him, I'm like, yo, remember, we're in this game as a marathon, not a sprint. It takes time. Losing streaks happen. You have times where you go and you win a lot. My hair is tripping, but you have times where you go in and you murder the market. And then you have times where, market kind of humbles you. And then you have to be able to go in and learn from those mistakes and be able to go in and see, okay, how can I refine my trading strategy in order to continue to execute within the market and see, okay, what certain criteria, what certain areas and points of interest I need improvement in. And that happens to everyone, and that's okay. But I want you guys to understand that as well, that, losing streaks are a part of the game. You are going to lose. You are going to win. Remember that, right? But it's how you deal with those losers and it's how you deal with those winners that truly matter. How are you going in and executing after you lose? Are you doing the same mistakes? Or are you looking to, even tweak your strategy a little bit and see, okay, what areas can I improve on, right? When you go in and do that, that's what allows you to, okay, get a more so, wow, my hands look fat in this. Hope the bulk's not getting to me. My face looks fatter. Anyways, with everything being said, so go in and see, okay, even if it's just like little tweaks, where can you tweak your strategy in order to see, a 1% improvement within it? That's all that matters. It's not all about winning every single trade, losing every single trade. If you always think like that, your mind will always go to, oh, I have to be on a win streak after I get my first win. It doesn't work like that. It's okay to have losers. It's okay to have winners. It's part of the game. Remember that. It's part of the game. Nonetheless, we had a lot of chop here. I didn't like how price action was looking, simply just due to, if I go, where is it? Right around here. I was looking to play the sell to the downside. Price action did break hourly structures to the downside. I wanted to see some extra confluence. Never got that confluence. So what did we do? Price action started to chop. So what did we do? What did we learn from last week? See, now I'm telling you guys what I learned from last week. To avoid the chop criteria. Why? Because it's within our playbook. Are you consolidating? You know, if there's no consolidating, cool, that aligns with your A+ setup. If you are, stay away. We stayed away. But now going into Friday, our beloved Friday, we were rallying to the upside. I did post my pre-market bias in, bam, right here. I said I was looking to play the sell to the downside, see the daily retracement. I did, you know, of course, if we disregard this, of course, I did say if we could possibly see us blow through that daily fair value gap, cool, we could be bullish, but overall I was bearish, and I still am bearish. But nonetheless, I was looking to play that retracement back to the downside on Friday, which, okay, we're not going to wait for this, which we did end up taking. Right here was our A+ market maker sell model. Whatever your market maker sell model is, I have a specific playbook tailored toward that. It is called my midday sell reversal. I did end up executing this trade on a more micro account. This was one of our old, smaller, like 11K accounts, for everyone wondering. I have a multitude of accounts, probably like 5 accounts in total. Around 5 accounts in total. And so the rule is with the firm I'm with, and for any of you who may eventually end up scaling up in the future, for majority of you guys that are still watching this video, you will, because I can tell you're dedicating, you're disciplined, and you're motivated. But motivation isn't real, we know that, so you're disciplined and you're driven, right? But with that being said, your firm will tell you every 30 days you need to trade at least once on the account. Just trade one. You have to place one position, whether you know it's a win or whether it's a loss. Doesn't matter the lot size, you just need to trade it to showcase your activity still on the account before they deactivate it and take it away from you. So with this account, I'll just like, you know what? I see our A+ setup, bam, let's execute. And it's funny because I executed with the micro account and did not execute with the macro accounts. So, and for everyone wondering why, yes, I am about to break down why. We did have news release around 7, so aka 30 minutes in the market open, New York market open. Bam, prelim UOM consumer sentiment. And I did want to wait for news data release. I wanted to see what would price action do, but our A+ setup did showcase here. It actually showcased here, but this was 540. This was too early for me into market open. This trade entry would have been absolutely beautiful, but that wasn't really my set market maker sell model. What I really was looking for, and I said in the recording with the Discord, is kind of something like this. Literally exactly something like that. Bam, 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 bam. And we did end up getting that. On the micro count, we did scale in a position. Bam, hit TP. I had a few other people in the Discord going and hit TP on this as well. Great job to you guys as well. You guys killed it. Before news data release, bam, was bearish, followed with an overall confluence within our bearish bias on the day, or price action data was bullish, so bearish on gold. So my mind instinctively went to, okay, we can continue seeing a lower push on the day. What happened? Bam, our A+ setup again, or at least a significant enough setup for us to trade. Bam, that's the issue. Wasn't our A+ setup again, right? Why? Because here I can clearly go on, and if I show you guys a journal, within it I didn't say A+ setup. Right here I said A+ setup, and here I said setup break even. You clearly see the difference in the aspect of, okay, what setups we were actually supposed to execute on throughout the day. Right here, this was still a valid setup if price action were to continue liquidating to the downside. Nonetheless, did have our setup on it. We looked to execute on it. Bam, play the sell, follow with an overall confluence. We were targeting these lows, thinking we could target 4-hour draws liquidity possibly, which I'm not gonna lie was a stretch. I didn't know it was a stretch. This was a 15-minute draw liquidity, 1 hour, then 4-hour, right? So I didn't know it was a stretch of what we were targeting, but nonetheless, those are my trade targets on the day. My average risk reward rule in my A+ playbook is at least a 1 to 2R, right? So going into it, bam, executed that trade. Price action did end up invalidating our 5-minute fair value gap retracement tool. right here, but we learned from Tuesday to allow our trades to fully play out, which we did allow them to we did allow it to fully play out. Price action retraced back to the downside. Broke structure, we said, okay, if we could see a significant break of structure, which we went on 15-minute time frame, we did see a nice break of structure. So I was like, okay, we have the potential to continue pushing bearish. Possibly we could see that retracement, back to the downside now. So I did execute another trade position, set the first one stops to break even. Ended up taking a loss on the day with price action retracing. Nonetheless, that is what happened on the weekend. So going in, what is Lonnie looking to do throughout next week? How is he looking to improve his trade strategy? I know this is a long video, but like I said, it's for me to go in and take notes. And for you guys who are, curious about how I look to continue to improve our trade strategy, because the aspect of it is going in and being able to properly continue to execute week after week, right? It's not day after day, it's week after week, because then within the week you can get a full understanding, right? Like, I know what I need to improve on next week. And it's not what a lot of people think. It's not, Benjamin, blah, blah, blah. No. But instead, it's actually take profits and stop losses. I was talking with a close friend of mine, and I was hitting him up. I was like, yo, I noticed your SLs are very, very good. And he hits me back. He says, yeah, Lonnie, I just watched your video and did what you told me to do. I was like, huh? He's like, yeah. I'm like, you know what? I'm going to take my own advice. And I said that in the Discord. I ended up adding the Discord. I'm like, boys, I think I'm going to watch my own take profits and stop losses video, and I'm going to take my own advice. And I'm looking to take my own advice throughout the weekend, how I'm looking to improve for next week. I'm looking to go in and back test a lot more. I'm going to journal, do my analog journal of the loss on Friday. But really going into it, what I'm focusing on back testing is where am I placing my SL, where are my TPs? Because typically for me, I don't like to, I like intraday day trading if price action is rallying. I don't like if it's chopping and consolidating. For example, what price action was doing on Friday, right? That's something I don't like to do. Go in and hold those. So this trade position earlier within the morning was a great example of us getting in and getting out. The other win throughout yesterday was another example, getting in, getting out. But the only acceptable one, even still, would have been this one of getting in and getting out. Your trade positions typically only around an hour. On TradeZella, and if you guys don't know what TradeZella is, amazing trade journal. Breaks down everything. I'm not sponsored by them. I really do want to be sponsored by them. So Umar, somehow in this world, big blue world, if you're watching, please sponsor me. Nonetheless, with that going in and said, it showcased that our average trade duration of our majority of our wins is typically from 30 minutes to an hour. But we have times where it's an hour to 2 hours. Typically, holding trades after that typically results in a loss due to New York PM session opening up and blah, 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 right? So nonetheless, we know what to focus on next week, which to us would be setting the proper take profits or stop losses. Why am I saying this? And executing with the proper lot size. Because I have an amazing trade habit of having such huge SLs to the point where my risk reward is 1 to, it's 1 to 0.25. So, and that's because I've used a set SL. You guys, I know that. For example, if I would have, that's not a good example. If I would have went in, let's just say here, right? Typically my SL would be around here. Over excessive, a lot of room that I don't need. Our first TP would be around here. Cool. 1 to 2, don't get me wrong, that's amazing. That really is amazing. But the proper SL for me, for my execution, would have been around here, right? Having your stops above 15-minute highs or 5-minute highs or whatever the case is, right? And that risk reward, you can see we already bumped it up by 1R. So it's already like, okay. Set your SLs in the proper place, go in and see how can you continue to execute on these. How can you, not shorten the duration of your trades, but shorten the duration of your trades for success. It's seeing, okay, what aspects do you need to focus on within your trading? Because for me, have the consistency down, have everything down. But the one thing for me is really the SLs and the take profits. Funny, because I made a video teaching you guys how to set proper SLs and take profits, which I'm so happy because people in the Discord are setting proper SLs and take profits, and you guys are killing the market. If you're not in the Discord, join the Discord. I don't know why you would still be watching this video for 24 minutes, but to the people who I know are, thank you. But nonetheless, that's my little outlook on this week. I'm going to continue to go and refine our trade strategy. That doesn't mean backtest for 1,000,000 hours, but that does mean go in and see, okay, Where do we need improvement? Where can we see improvement? And how can we continue to make that improvement, right? Going into next week, we do have a nice clear week. I'm going to make a weekly technical analysis video and bias video, just everything of the sort for next week. But apart from that, that is my little recap of the week. Like I said, break-even week, but still such an amazing week to go in and learn. Just an overall amazing week, just be able to go in and, be able to analyze, okay, where can we see improvement? Where can we continue to grow on our trading strategy and everything of the sort? But apart from that, I love you guys. It's been a minute since we posted, so like I said, if you're still watching, let me know what you want to see. But if not, majority of you guys won't be watching. But if you're still here, I love you. You guys know that. Hit me up anytime you need me, whatever it is. Should you need my phone number? I'll give you my phone number. Hit me up whenever you guys need me. You guys know I mean that. I love you guys, and I will see you in the next video when we post. And we'll post when we post. Sure. Okay. Adios.